Gotta get this coffee in. It's nice and early here now. It's a good day today. The stock market was up huge yesterday, and some of my best investments and my biggest investments did really well. For example, Facebook went up 15% yesterday between the market hours and post-market hours. Oh wait, that's not this video. Alright, we'll get into this video, the right one. That video is coming up soon here where I look over my portfolio. This is going to be the unsexy way that I made over $20 of passive income every month in just a couple hours. Now, I guarantee you, after I tell you, some of you will turn off the video. Although this isn't some scammy thing that I'm doing. This isn't some dropshipping site or some t-shirt selling store or something that's a lot of work that you have to go out on a limb for. This is something that a lot of people can do, and it guarantees me a 62% return month to month. Now, you don't need any money to do this. It requires very little time, very little effort, and it's quite simple actually. See, there it goes again, sounding really scammy. In addition to the guaranteed 63% return, I also was given a $200 gift card to do this too, to the place of my choice. So that's another cool thing. The gift card's not included in the rate of return that I gave. All this will take is an investment of a few hours. For me, it took about 2 hours to get this $20 a month. And for other people, you can get much more. You could get hundreds of dollars, if not $500 a month, depending on your situation. So in finance, there are three main ways to grow your wealth. So one is to save more, one is to make more, and one is to invest more or make better investment decisions. So today we're going with saving more. So that's part of the reason why it's unsexy. Everyone likes to see investment videos about the next hot stock, buying into Tesla or something like that. But this is just saving more, being smarter about how you're spending your money. So the US public holds $18.23 trillion worth of debt. A lot of this is in mortgages, some's in credit cards, some is in student loans, but it accounts for about $55,000 per person on average. So it's a very significant amount of money. Enough teasing. What I did was I refinanced my student loans again. If you guys have been longtime subscribers, you might know that I made a video before about creating passive income from refinancing my student loans. In that video, I dropped down from 6.2 to 5.5%, and now I went from 5.54% down to 4.84%. Now I know that doesn't sound very exciting, but on about $40,000 worth of student loans, that is very significant. Now, if you're about to turn off the video, don't turn it off, because even if you don't have debt, this might still be applicable to you or applicable to someone you know. But watch through, because I have an idea for how you could profit even if you don't have much debt right now anyways. So I'm gonna break down the numbers for you. I had $39,803 in these student loans at 5.54% interest, which ends up being $2,205 worth of interest over the year. Now, I refinanced my $39,803 at 4.84%, which saves me 0.7% a year, and then I only have to pay $1,926 every year in interest. So that accounts to about a $279 interest over the year, and I switched it from a 20-year to a 15-year. So I end up saving about $23.25 each month. So this might not sound like a lot, but for a couple hours, that was a really good return. I also got that gift card on top of it, like I said. And then it's also nice because this is untaxed savings. So if I were to make the money, it would cost me even more because I have to pay taxes on it. And then I get $23.25 out of it. So it really created more like high 20s or maybe even $30 worth of passive income each month. So the reason I say it gives me a 63% guaranteed return is because it costs me about $37 more a month now that I refinance to a 15-year loan. Now, it could be a much higher rate of return if I had put it over the same amount of time, because then I would be paying less interest and then I would just have lower payments still. But I had to decrease the time though by about 5 years, so I end up paying $37 more a month, but I save $23.25. So because I'm putting in 37, I get 23 extra out. I do 23 and 25 cents divided by 37, that gets me about a 63% rate of return. So another way of thinking about this is if I were to have investments that paid me this much each month, it would take about $5,600 worth of dividend paying stocks at a 5% dividend yield, which is a pretty high dividend yield too as far as stocks go. So this is really significant. It saves me a lot of money and investing that I have to do to make up for that $23.25 each month. Some people might say, why do you even have that much in student loans if you are investing? So I actually have more than this. I have another $30,000 on top of it. So I have right under $70,000 in student loans. I had $115,000 when I came out of college, but I've been able to get that down. I've paid probably about $55,000 on my student loans now, but it's accrued some interest, so that's why it's not down to $60,000. But I'm not really in a rush to pay it off anymore because I have it over such a long time span, and because the interest rates are so low now. You might say, oh, 5% or 4.84 is not that low, but between the 4.84 and the 4% that I already had, it goes to about 4.4%, and I can write off the interest on my taxes up to $2,500. So it ends up taking about 10% off of that interest and crediting it to me at the end of the year in my taxes. So it ends up being like a 4% interest rate. So I figure that I can make more in the market or saving for a house or really anything compared to 4%. Some people really like the stress of not having loans in general and not having that monthly payment. But I'm almost the opposite way, where I get enjoyment out of having access to the money and having the opportunity open to me. So I'd much rather have $100,000 worth of debt and $100,000 worth of stocks or equity or just cash, because one, I think I can deploy it better than my interest rate, but even if I can't and they're exactly the same, I'd rather have the flexibility that all that investing in cash gives me, because I have a long runway. So if I lose my job or something, I have access to it. Not that I'd want to take out of investments, but if an opportunity comes up where I can get a guaranteed return, which after being in this for a couple years and also owning my own businesses and having some really close friends that were willing to give me opportunities, there have been some times where it was a guaranteed return and I knew that I could get a certain rate of return, and I went for it and I got a great return in just a few months. One example that could even be all the bank account bonuses that I do, where the bank guarantees that if you do these couple things that they will give you a bonus at this date. I actually just collected a $500 bonus from Fifth Third Bank a few days ago on a business account because I put $1,000 in, and then 60 days later they paid me $500. So that's a guaranteed return of 50%, and that just took me 2 months to do it. So that's an insane annual rate of return, but it's guaranteed for the short term, so that is worth doing. Now, I'm not saying that you shouldn't pay off high interest debt. I definitely think you should, because that's guaranteed, and I'm all about guaranteed returns. So if you can get a guaranteed 8% return, 10% return, 20% return, you should definitely take that. But if it gets below 6 or 7%, then I think you have choices about what you want to do. Now, if you have some kind of debt, you can probably refinance it like this. So if you have a mortgage, if you have credit card debt, if you have student loans, you can look at different options to refinance the debt. On credit cards, you can do it for 0% interest a lot of the time if you get a 0% interest card. With mortgages, you can probably refinance to a really low rate right now. Unless your credit is really bad and you can't refinance for some reason, interest rates are as low as they really ever have been since the Fed cut them. So I know people that are getting around a 3% interest rate. So if you're up at 4 or 4.5%, you can probably save yourself a couple $100s a month in payments. And again, that's untaxed. So that is really nice too. It's not like you have to earn it and then pay tax on it and then get the money afterwards. Now, if you have student loans, you can do what I did. For any of these things, I will put the link to Credible. This is what I used. It's really nice because if you use the link, you get a bonus. I also get a bonus. But then it's also like a search engine. So it takes from a bunch of different banks and does the work for you. So you don't have to apply to 10 different banks to get the best interest rate. It will tell you based on your criteria and your numbers what gives you the best rate, and then you use those banks. So Credible is like the search engine that gives you all the top banks for your specific situation. Now, I mentioned earlier in the video, if you don't have any loans, this still might be applicable to you. Now, this is going to be going out on a limb a little bit here with this thinking, but let's say you don't have a mortgage, but your home is totally paid off. If you felt comfortable doing it, you could put a mortgage on the home, let's say for $50,000. And if you could get a 3% interest rate, all you have to do then is be able to get higher than that to make it worth it in an investment. So right now, the stock market's still down a little bit. So if you invested in some dividend stocks that you felt really good about and you took out $50,000 and put them in there, you would have a monthly payment still on your home, but then you'd be able to get the dividends from those stocks, which might be a good situation for you if you feel comfortable doing that. That's slightly more risk than most people that pay off their homes early would like to take, but that might be a solution for you. For example, I invest in SPHD and their dividend yield is right around 6%. They hold a bunch of different companies and all those companies then pay them dividends, which then pay us dividends. So like I said, I was getting about 6% in that. So if you took out $50,000 on your home and you put it in that stock, you would be accruing about $1,500 in interest each year, but the dividends being paid to you would equal about $3,000. So maybe not worth it, but if you look at a larger scale, maybe it would be. So that's an unsexy way. I made over $20 of passive income every month. Hopefully you guys can take advantage of this too if you have any kinds of loans. Otherwise, I will give a portfolio update here in the next few days. I really wanted to buy more stocks on Robinhood today, but it looks like my deposit's not ready yet, so I'll have to do that in the next video. I also have something exciting, a couple things that are really exciting coming up for videos that I'm excited to do with a couple different people, so stay on the lookout for that. Subscribe if you haven't subscribed, like the video because it helps out the channel, and I will see you in the next one. Bye.